Assalamualaikum to all. Yeah, so last week we discussed about EPS, and then EPS, there are two types of EPS we discussed. One is basic, other one is diluted or diluted. I don't know how you pronounce in English. Diluted. So basic, we got the good understanding now. You should first of all know equation that we discussed about it. Profit attributable to ordinary shareholders divided by weighted average number of ordinary shares outstanding dividend. So that complete meaning you should have in calculating both numerator and denominator, so that we understand. And then we went on to talk about the implication of basic EPS. There are four different examples or categories or items that we need to factor in calculating basic EPS, which are bonus issue of shares, right issue of shares, share split and reverse share split. The major component here is right issue. In that we went on to talk about something called TERP, theoretical ex-right price. You should know how to calculate it. In a literal way or in a literal meaning of TERP is nothing but weighted average price of shares, including both existing and new shares purchased by existing shareholders. So this we done, and we understood there is a bonus implication, and then how to change the. Now in a right issue, when you calculate the weighted average number of shares, and if a right issue takes place on 1st of September, for example, then what you do is that, let's say I have 100,000 shares, and market price, for example, 15, theoretical ex-right price 14.5. I'm using the same example from the previous session. And how many months here? 8 months, right? So this is 1 January. So what you do? 8 over 12 into 15 divided by 14.5. You will understand that because of this component, my number of shares will increase. Why? We are gifted with some additional free shares. So this is what we set bonus element. And you also need to go back to the previous year. Normally previous year they will give you the calculated EPS. It's already published. If the published EPS is 42 cents, for example, then I need to calculate the restated EPS. How I calculate restated EPS? 42 into the ulta of this, the reverse of this, or inverse of this. If you hold from the ear, hold him up and then put him down, you will get this answer, 14.5 over 15. If you tend to read any theoretical books on this, they will try to give you equation for this entire portion and for this. Problem will be, it's very difficult to remember such mechanical equation. Rather, we understand the reason why this component and this component, then you don't need to remember such equation. You just follow the practical reasons behind calculating that. So with this, we are done with the basic EPS. Now we need to go and understand diluted EPS. Let me change the color because my school principal will be very upset if I use one color too much. So there is one rule from IAS 33. Diluted EPS accepted. But anti-dilution is not accepted. What I am trying to mean, okay, I will come to this after explaining the possibilities or scenarios where the dilution could be a reason. Now let's take a small example. Profit, let's say 600,000. Shares, let's say 1 million. Dr. Dia,
Yes,
tell me how much is EPS now?
660,000?
660,000? Something.
No, first one is 600,000
Aiva
Divided
divided by
1 million.
1 million. What is the answer?
It's 0.45.
I will kill you, brother, now. Inta safal yani?
Right.
I will mamnu Lal airport matar muskil abad. How much?
0.6.
You need calculate 0.6. Or 60. Simple, straightforward. Now, what do you mean by dilution? After some impact or after some implication, this 60 cents. Now, you remember last week we talked about chemistry. Because I have 50 grams of salt, 500 milliliter water, so my concentration is X, for example. Then after what I am doing, I am adding another 500 milliliter more. So what is happening to my concentration is going down.
Going down the range.
Correct?
Yes.
So that's a chemical calculation. Same argument here. Now, for me to have the EPS to be diluted, the EPS amount value, this answer after some implication or after some changes should increase or decrease.
Decrease.
Decrease. So now changes after. Now my EPS is 60 cents. I do some changes here, and then if I calculate EPS, if that after the change, when I calculate the EPS and that EPS is going down, for example 55 cents, this scenario is what we call dilution. Or when I do the change and when I have like 63 cents, this is not dilution, this is called anti-dilution. Always anti scenarios are difficult to manage. So standard says you have to produce only diluted EPS, no anti-diluted EPS should be disclosed. If the company is experiencing any anti-dilution, yet you don't need to disclose that in your financial statement. But if the EPS is experiencing dilution, then you should disclose that in the financial statement. Where we will disclose this? You know that we talked about that in the last class. We have the income statement, and at the bottom we have the profit for the year. Just next to it we disclose the EPS. When I say EPS, that is basic. And if the company is having diluted EPS, then you should also say you must have both. You must have the basic EPS and diluted EPS. See, when the company is experiencing dilution, doesn't mean that there is no basic EPS. The basic EPS is still you needed to calculate. Once done with that, what you need to do, you have to calculate the diluted EPS. Okay, now let's see those circumstances or scenarios how the dilution could take place. Look into this income statement. I have sales 1 million minus cost of sales 400. So gross profit 600 minus all expenses 150. So this answer, how much? Yeah, Mr. Dr. Diaz. 450. So this is profit before interest and tax. And have you heard about something called convertible debts or bonds? Not James Bond or not Harker Bond. I don't know, Harker Bond they may not know. Harker Bond was in Sri Lanka. It's a blue. James Bond also you know. James Bond 007. So convertible debts or convertible bonds. You have any idea what you mean by this?
Yes or no?
No.
You didn't answer.
Yes. A simple question, yes or no? We need to know. Let's say in the balance sheet, meaning statement of financial position, I have under non-current liability a loan. 8%, they write like this, convertible in 3 years, let's say 1.2 million. And they also say that every $100 you receive, let's say 12 shares, for example. Every $100, you have the meaning the person who gave the loan has the option to execute these convertible rights given to the team who gave the loan. So they have the right to accept or to become a shareholder by foregoing the loan. Meaning, now total 1.2 million is the loan, which what they can do, they can take some shares. Can someone do the calculation how many shares they can take? For you to give up, for you to forego $100 loan, you are receiving 12 shares. If you do forego entire 1.2 million loan, how many shares you can receive?
2 divided by
20%.
20%? 30.
20% from 1.2.
بقول لك المية خدت 12 شيرز.
Read that one, what he wrote. Answer.
$100. So if it is $100 you're going to forego, the company will give you issue 12 shares. So I have loan 1.2 million. So come number of shares.
112 في
1 divided by $100.
1.2
million.
1.2 million
Divided by $100.
divided by
$100.
100. So if I divide by 100, how much is the amount? You see, the equation is for $100 I am receiving 12 shares. So 1.2 million, how many shares I will receive? So 12 into 1.2 million divided by 100. So
144.
144,000, is that right?
Yes.
14,000 pounds.
14,400.
No, 144,000.
Yes.
144,000 number of shares. These people who gave the loan, they will receive the shares. Okay, now look into the circumstances. Now I am coming back to this income statement. And you see also I have written here 8%. So if I have a loan of 1.2 million, what will be your interest at 8%?
96.
How much?
96,000.
96,000. So my interest here, if I make an assumption in this company, there is no other financial liability. I make an assumption like this. So my interest is how much?
96.
96. So then I will have profit before tax, which is 354. And the tax, just assume at 30%. Tax at 30% is, someone please help me in calculation. See, I don't have calculator. 3, 5, 4 into 0.3. MashaAllah, Ana Kallam, poor principal. So then, this is profit for the year. So which is minus 350, 243.8. Now, see the interesting story now. Now, if I convert all these liability into shares, what is going to happen now? Will I be paying that interest? I won't be paying that interest. So, this profit will increase by this amount. Correct? And but not directly like this. We have another small complication here. 30% tax. So how that will happen? Now 1.2 million, 8% into 1 minus 0.3. If anyone did not understand this calculation, tell me, I will explain.
Understood?
More.
You want me to explain? No? Okay. See, now I calculated this profit for the year after deducting the tax. Tax, what is the percentage we assumed? 30%. And before that, my profit before tax was 354, which after subtracting the interest. So, do you agree with me? This number here, after interest. Yes or no? That number is after interest. And if I don't have interest, if this interest is 0, what's going to happen to this number? That's going to increase, correct? That will become 450. Am I right?
Yeah.
So if this is 450, how much is the tax?
30% of 450.
Yeah, please tell me how much. 30% of 450 will be 100 and
45,
135. This is 135. Now what is the difference? Okay, how much is this then? 450 minus 135, 350. Now we need to find out the difference in these two. 315 minus 243.8. 71.2. This 71.2, and can you do a calculation here? What is the answer we get? Just do the calculation, please. 1.2 million into 0.8 into 67.
67, yes.
So that means this calculation wrong?
Yes. 67 200.
315 minus 243.8.
8% more than another one.
Oh,
Yes, correct.
315 minus 243.8. 67.
200.
It should not come. It should be the same answer. Something like that. Anyway, argument what I am trying to raise is that because of the interest, my profit is reducing. And if I convert my liability into shares, I will not be paying any interest. And because of that, my interest is saved, profit will increase, by that 30% more I have to pay for tax. So that's why we do this calculation. Clear? So this is what that calculation is. Accordingly, now assume your number of shares here 1 million. Your number of shares 1 million. Now, because of conversion, how much more shares we got? Under 44,000. See, now we calculate basic EPS first. Basic EPS is 243. 450 minus 354 into 0.3, 106.2 minus 354, 247. That's the problem. Okay, now it is correct. Okay, so my basic EPS will be, profit is 247.8 divided by number of shares 1 million. So how much is your EPS? 0.2478 dollars, huh? No, what decrease?
This is the
This is the basic EPS.
Basic.
Now we need to find out the diluted EPS. In finding out the diluted EPS, what we do, the profit will be 247.8 plus what number? This number. So that we got how much? 67. 67 is paid. 67,200. Originally, how many shares I have? Let's look at this. Plus, because of this conversion, if I will do the conversion, what will happen to the number of shares? Increase by 144,000. So, can you please now do the calculation? 247.8 plus 67.2, that is 315 divided by 1,144. So, what is your answer? $315 divided by 1144. 2753. And how much here? 2478 here. 2753. So this is what? Dilution or anti-dilution?
And
See here, basic is 0.2478. Correct?
yeah.
But here 0.27, meaning it is greater than this number. It is anti-dilution. So this you don't need to disclose in the financial statement. Whereas if I change the scenario like this, every $100 they receive 20 shares. Now what is the scenario? For $100, 20 shares for 1.2 million, 20 over 100 into 1.2 million. So this is 240,000.
Yes.
So if then, what will happen now? The numerator will be the same. It will be 315 only, whereas 1 million plus 240. So that is 315 divided by 1,240,000. Now, what is the answer? 315 divided by 1,240. Still the
25.
I will make it 30 shares. If I make it 30, so that will be 360. So then this will become 1,360,000. So 315 divided by 1,360, 2.316. 0.316. This is less than my basic EPS. That's my basic EPS. So that you need to clear. So this is one scenario. What is the scenario? Convertible. Now then, what is understanding? When you say convertible, in 3 years time they say convertible in 3 years time. Please remember, there is no mandatory or obligatory requirement for the person who gave the loan to accept these terms. This is just an additional option given by the company to the people who have lended money. That's not necessary for them to say that, okay, my friend, I will take it up. They can still stay without doing it. So that is the normal circumstances. And so whenever you see in a scenario where there is convertible, you have to do this. And then calculate and see whether it is dilutive or anti-dilutive. If it is anti-dilutive, you just do nothing, in other words. But you have to justify, this is anti-dilutive, so we are not disclosing it. But if it is dilutive, you got to disclose like what I told you. Now, there may be, there's one more scenario called share options. Do you know what is share options are? See, let's say the market price is 15 and the par value is 10. A normal situation. Now, what do you mean by share options? The company is giving such an option to the public, existing shareholders. They say that, okay, we are in need of, say, the company is in need of $3 million, example. Company is in need of $3 million. They say that we are giving you an option to existing shareholders. You can finance this. You can get the benefit of good morning. Good morning, Mudil. I'm good, sir. And you? Please wait until another 1 hour. I'll call you. No, that's all done. That's exactly what I'm telling brother. That's what I'm saying. We have done with all of them. from our side work is done, but whether to meet tomorrow or not, I need to confirm with my team. After that, I will call you. That's what I am telling you. Inshallah. Okay. Okay, inshallah. Thank you. Right. So the companies need how much? 3 million. Now, if someone will buy from outside, how many shares they will get? Let's say, not the existing shareholder, outside potential shareholder, he want to purchase this 3 million number of dollars. How many shares they will receive?
3 million divided by 15.
Very good. 3 million divided by 15. How much you get? 20,000 or 200,000? 20, right?
200,000.
200,000. Yes. Now what the company is saying, we are happy to take at 12.5. We are happy to take at 12.5 from whom? From existing shareholder. If the existing shareholder willing to invest this, how much shares they will get?
140.
3 million divided by 12.5.
5.
What's the answer?
240.
240,000.
40,000.
See, this is what we call share option. Giving a benefit to existing shareholder to purchase some shares at a price different to market price. Because of this, existing shareholder receiving extra how many shares? They are supposed to receive 200, but they received how much? 240. So that means 40,000 shares, they received more. Now, we have already calculated our basic EPS. Now, looking into the context of dilution, because of this additional 40,000 shares will increase, what you do is that, will there be any change to your profit? There is no change to the profit. Profit will be still the same. If I go back to this example here, the profit is 247.8. Profit is 247.8, whereas number of shares will be 1 million, you see, plus 240 minus 200. So, 247.8 divided by 1,040,000, is that right?
Yes.
So, what is your EPS then? 247.8 divided by 1040, 0.2382.
Yes.
This is also dilution. So in dilution there are two possibilities. One is convertible debts. Other one is share option scheme. Clear? Now one more additional information. Could the company face more than one dilutive situation? One convertible loan, one share option, or two convertible loan, possible or impossible? It's definitely possible. Then, how I know which of these are dilutive and which of these are non-dilutive? What you have to do is, you have to calculate something called incremental EPS. Kalbata Kathir.
Now you know that you're not doing much finance, huh? This is real finance. Corporate finance.
You have
All
to,
real work.
yes, you have to calculate something called incremental EPS. What is incremental EPS now? I will take the example of this convertible. That convertible of this one. This example. Let me change the ink, otherwise my principal is staring at me. So this one. What was my answer? My answer is no, 67,200. That's what? That's my profit implication. If I do the conversion, I will have an additional profit of how much? 67,200, and I changed the scenario at the bottom right. I went on to change it to, I got it this 1360, meaning 200, no, I made it to 360. Right? So, what is the incremental number of shares? Incremental profit is 67,200. Incremental number of shares. Increase in incremental number of shares is 360. Clear? So what would be the incremental EPS? Incremental EPS will be 67,200 divided by 360,000. What's the answer? Point 0.1867, is it? Yeah, 0.1867. Now, if you compare this answer to my basic EPS, what's my basic EPS? 0.247. Remember, whatever the incremental EPS is less than the basic EPS will result in, if you combine these two, will result into
Yes.
dilutive EPS.
The less.
If you do a calculation for a scenario like this situation, or I will take it, yeah, suppose what? 144. If you do that, 67,200 divided by 144,000. Can you try now? 67,200 divided by 0.46 0.4667.
Yes.
What was my basic EPS? My basic EPS is 0.247, whereas my incremental EPS is much greater than basic EPS. So, can I consider that as a dilutive EPS? If you combine those two, my net answer will be even bigger. Understand? So, the standard says, my dear child, please do calculate incremental EPS, and if you find out that incremental EPS is dilutive, how you know? Compare with your basic EPS. If it is less than the basic, then you combine both and calculate. If the incremental EPS is greater than the basic EPS, do nothing, mas salama. Then Mr. Jia can go home to Egypt. Understood? So this is all about EPS. So with this, now we are left with IFRS 7, IFRS 9, IAS 32, 39. These two will be financial. Instruments. Next is IFRS 15, revenue, from contracts with customers. Before, they used to have two standards, IAS 17, no, IAS 18 and IAS 11. They cancelled and they merged and they came up with IFRS 15. And one more, IFRS 16. Jesus. It will please all of us when studying this. So we will study these three remaining topics, inshallah. Sunday, what I will do, I will complete IFRS 15 first. Then I will finish IFRS 16. Shall I do this first? Okay. I will do this first, number 1, number 2, and then finally number 3. I have to be very honest and open. If someone comes and tells you I am the doctor in this 3 standard, please don't believe them. No one cannot, still I have my doubt. The man who writes the standard also, whether he understood or not is a problem. It's a matter of level of understanding. Someone can understand 60%, some 70%. If someone knows 70%, maybe you can say author. Average accountants know 30 to 40%. So we will see how our knowledge level is. It will be a collective discussion. I may need help from you also. We will go accordingly. With that, our all this hard work of Sunday and Wednesday will over, inshallah. So these two, I will finish it in one class. This is also one class. Next week we will finish these 2 standards. Sunday and Wednesday, inshallah, if I come on time.
Very impossible.
Yes. So second, this we may need possibly 2 weeks.
Oh my God.
This will need 2 weeks. So this
Once everything is done, you have the short notes, you have your notes, everything is there. I need a summary from each and every standard.
I need to give you PowerPoint slides for consolidation and EPS. I will share that.
You will share everything, but I want from your own words. What did you understand? So that you will go and read back again and you will give your own words. What did Stan say in a summary? What did you understand?